Good morning, everybody. This is Mark. We're back here for the morning call. This market cannot seem to hold a bid for its life. That's really the story. That's been the story for the last few weeks. You get the upticks, they get sold into resistance, and consistently at the end of the day, we seem to be down for the day. And we might pop up, pre-market or at the morning, but we never seem to hold the bid. And until that action changes, I think you just got to respect what's happening. We obviously have the fiscal cliff that's on the horizon. Yesterday with Israel and Gaza, the fighting that began, the war that could obviously affect oil prices and other commodities. We have a lot of stuff looming over us, and the technicals are not telling us anything's ready, except the fact that the oscillators are down to levels where significant bounces can happen, but charts are broken, so it's only going to be an oversold bounce. It's not going to be an extended rally if we're looking for that. So let's go to some stocks and the market overall. So I have the spider chart up, as I like to always have up. We broke the 200-day significantly yesterday with some authority, with some decent volume. Normally, I'd like to see us retest that 200-day at some point in time on the upside, but at the same time, this could continue. It's been very there hasn't been a panic, which again sort of scares me a little bit. You'd like to see a little bit of capitulation at some point in time that we're changing. It has not happened. It's been slow. It's been meticulous, and that's the action we're getting. I do think we're oversold, so that means I do think a bounce is in order at some point. This bounce will be probably a day and a half, 2 days max when it happens. It's a little bit more of a calculated play. You're not going to get it the way everybody wants to get it most likely, but that's part of the stuff in the cards. I would look at 135 as at least initial support on the spiders temporarily, and then use the 200-day as some resistance, 137.48. Let's go to the Qs, which again has Apple, Google, a lot of the other high beta stocks, quite frankly, have not held in there very well. Apple has now, the Qs are down, and you can just see the daily chart. It's been respecting its 8-day moving average for the last 2 weeks or last week and a half. Every time it gets to the 8-day, it comes down. So we're now getting a little bit further away from the 8-day. So I would expect us to come back to the 8-day and probably at least find resistance. That would be a decent ascending channel that, quite frankly, should work itself to the upside at some point. We are just not there yet. I think that's the key. Here's the little channel I'm drawing. We're respecting that, these levels, and that's where we're at. So that is, I would probably say 50, some support. I'm trying to find some support for us. 60, yeah, I'd say 62, 62.15, which we're right about there. Small support, and then you're looking around 61.50 as a little bit more support. So keep that on the radar. RWM, same type of play. It's just weak, and lots of rollovers are happening. Let's go to high beta for a little bit. Apple. I know it's the stock that everybody loves to hate at this point in time. It was a darling all year until about a month ago, and it cannot find its way. And I really think the only significant bounce will happen after it regains at least some composure above its key moving average, which is at least this point, the 8. You probably might get a rally to 575, but along the way, it's been very good shorting on rallies, and for those that have been doing it and taking advantage of it, you're doing the right thing. At this point in time, even if I was just totally bearish, I think I would be taking a little bit of a break, or just blindly shorting Apple. I'd be very strategic because I do expect a bounce, or I do expect something to happen in the short term. Technically, we are oversold on Apple, but we're not ready yet. You got to keep it on the radar. 555, 560 will be that trigger, the true trigger that will probably get some momentum and probably get some shorts to begin to cover. Google, right at the 200-day, and really we'll see if there's some support right here. 650, 652 seems like a little bit of support, but cannot get a bid, and it's very lethargic. That's the action we're getting across the board. Amazon, of the big three, right at the 200-day. Maybe it tries to hold, at least initially. We'll have to wait and see. But again, lethargic action. Quite frankly, this is not giving you a whole lot to lean on. If this does break 222, 220, 222-ish, I think you have some real downside, probably to 215 to 210 on the stock, and I think it actually will pick up because it's been very tight action and consolidating nicely. If it actually starts to speed up, I think you can probably jump on the short side. Let's get to the home builders. We talked about that. I talked about it yesterday, that You know, I've been talking about it for a few days that it seemed like I had some shorts on Friday. You know, obviously covered it more on the short term, but you know, you saw the change across the board. You can just look at the XHB. You had the 8 and 21 day moving average crossing 2 days ago. 3 days before that, you definitely saw some weakness. It's been the strongest industry all year. You're getting some pullbacks, tax gain selling, whatever it may be. Right now, technically, we're moving to the downside, and it looks like more action is needed. And it looks like you can probably test the 100-day, which is 23.61. So we do have some more action. I think you're going to find a little support, small support, right around here, 24.40. But if it breaks there, 23.61 is the next stop. Keep it on the radar. XHB obviously is the ETF for the home builders. And look at your Toll, Lennar, Ryland, KBH accordingly, and you'll be able to see what I'm talking about. Banks. Lack of leadership. I've been saying it. There's no leadership right now in this tape. Goldman, the banks were hanging up there, and now they're at the lower third of the trading range of the last 2 months. Possibly you could hold it there. That's the XHB I'm looking at. But at the same time, technically, I don't know if you're going to get a significant bounce. But if you're going to look for a bounce, 112, I'm going to probably try to take a stab at it for a move back to 115, which is where it is today, 116. But overall, not great. Possibly trying to get back to its, I think that's the 100-day, like 109 on Goldman. Look at the FAS, the ETF, so we can actually just keep it. It has touched its 200-day, or is it the 100-day? I'm sorry, it's the 100-day. So this is the first time it's touched its 100-day in a while, which again, my rule of thumb, the first time it touches it in a long period of time, I think it's a little bit of support. It's a key moving average, so there is some support around 95 on the FAS. That might mean that some of the financials might bounce, but I think it's going to be short-lived. But look at that level. I'm not putting a new short on. If I was short, I would be looking to cover at least the FAS at this point in time. Biotechs, we'll go to that briefly. One of the leaders, Amgen, still looks good, but you do have some key moving averages that it's now below the 8 and 21 from the short term. Possibly gets to the 50-day, which is around 84. Right, it's actually right there. The 100-day, I might be, the 100-day, 82.20. So keep that in mind. One of the best in breed that seems to keep showing great promise. GILD, GILD, obviously gapped up the other day, holding that gap up. Let the key moving averages play catch up. Maybe it has some follow through, and then some of the other leaders that we've been following for the better half of the year. RIGN, no real trade going on. Probably 150, a little bit of resistance. 145, 140, certainly some support. PCYC, this is the key. Moving average, 8. It's been respecting. It's been below the 8-day moving average for now about a better part of a week and a half, 2 weeks. Comes back above there. Maybe you get a short-term buy, which I've seen in a few stocks. MLNX is one of them. We'll have to wait and see. Right now, 51.50 is resistance. Breaks above there. You probably can get a move back to 54, 55 very short-term. So it might be a tradable play for us to really get involved with. Priceline and CMG. I know I'm going over a few ideas, but I think we talked about Priceline. Priceline seems like it just wants to fill the gap. That's back down to 600. The big move was yesterday. See if it rests today, and probably another nice follow through if the market stays down back to 600. And CMG, I was short early. Nice consolidation. It looks like if sellers want to get back in charge, they can do it at any time at this point, as long as it stays below 260, 265. That's where we're at, guys. You could just see the tape. It's haves and haves not. Right now, technically, not a whole lot is showing us goodness, certainly from the long side. If you've taken advantage, and it actually, even from the short side, it is very difficult to hold. The time frame has to expand a little bit. The conviction certainly has to be there, and it's very tough after the first 7-8% down move, and you keep trying to get these moves on the stock. On Apple, another 3% on a 20% down move. It's tough. So the key is wait for your opportunities. Whatever time frame you're trading on, wait for your opportunities. That's the way to take advantage of this tape. We are in it. It seems like there's not a lot of interest either way, and certainly the movement is to the downside. That certainly can change when there's no interest. And I think that's really where a lot of people are getting, in trouble. They're, buying, selling, and there's really no rhyme or reason to what's happening. So right now, technically, no buy signals are setting up, but we are in oversold territory, which means you got to be ready for a bounce at some point in time. That bounce most likely will be short-lived, but you got to respect it because, again, we have had many days down and lots of stocks are oversold for us to take advantage of. So good luck today. I'll be on the air for half the day and then heading out of town to the trade show in Las Vegas. Good luck trading, and good luck trading on Friday.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.